Ladies and gentlemen, good day and welcome to Mahindra CIE Q2 and H1 CY22 results conference call hosted by ICICI Securities Limited. On the call from the management team, we have with us Mr. Andrew Arinadza, CEO, Mr. K. Jayaprakash, CFO, Mr. Vikas Sinha, Senior VP Strategy, M&A and Investor Relations, Mr. Oroit Lafiente, Chief Business Controller, and Mr. Swapnil Saudagar, DGM Strategy, M&A and Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management. Thank you, and over to you.
Yeah, thanks. This is Vikas. Good evening, everyone. It is a bit late today. Our apologies, but there are constraints for us, and we are grateful you could join. We start with an overview of the legal structure of MCIE on page 5 of our investor presentation that has been uploaded on the website. Here we see that in line with stated strategy, CIE Automotive, our parent, continues to reaffirm its faith in MCIE by raising their stake from 60.75% equity to 63.44% during Q2 C22. Now let's look at the Q2 C22 results for MCIE India on page 7. So sales have grown by 46% year on year compared to the same quarter last year, Q2 C21, and the sales figures in this quarter are 12,794 million, and this growth is much more than what our markets grew by. While uncertainties around the Indian economy arising out of global factors remain, the auto industry in India is expected to remain buoyant in the coming months. MCIE India EBITDA margin in Q2 C22 was 14.9%, which is similar to 15.1% obtained in Q1 C22 and higher than the 13.9% recorded in Q2 C21. The EBIT and EBT are at 11.1% and 11.4% respectively in Q2 C22. Despite headwinds like steel price increase, inflation and other costs, and semiconductor shortages, etc., we have maintained margins in India. On page 8, we have the Q2 C22 results for MCIE Europe. We have seen a growth in year-on-year sales compared to Q2 C21, the sales figures being 12,816 million, and this is despite the underlying market dropping. The market sentiment in Europe remains uncertain, but we do expect a better second half. That is, H2 C22 could be and hopefully would be better than H2 C21 in terms of the market. Margins in Europe have been hit in the last few quarters by steep increases in energy costs, rising steel price, and inflation and other costs like freight. We have been negotiating with our customers to pass through increases in energy costs, and in many cases, these pass-throughs are being operationalized. Because of these efforts and the efficiency measures applied, MCIE Europe's EBITDA margins, which had fallen to 9.1% in Q4 C21, rose to 10.2% in Q1 C22 and has further increased to 11.6% in Q2 C22. You can clearly see an improvement across the quarters. MCIE Europe in Q2 C22 had an EBIT of 8.5% and EBT of 7.9%. Let's move to page 9, where we see the consolidated Q2 CY22 results, taking into account both India and Europe. Sales grew by 32% compared to Q2 C21, and the sales numbers are 25,609 million. The consolidated EBITDA for Q2 C22 was 13.3%, EBIT 9.8%, EBT 9.7%. Q2 C22 performance is the highest quarterly results ever that MCIE has achieved in terms of absolute sales and EBITDA. Page 11, we have the half-yearly C22 results, H1 C22 results for MCIE India. The sales have been INR 24,815 million, maintaining the growth momentum from the semester before, that is H2 C21. The EBITDA is 15%, EBIT 11.1%, and EBT at 11.2%. On page 12, we have the H1 C22 MCIE Europe results. Sales are 25,238 million compared to H2 C21. In this quarter also, India has more sales than Europe. In this semester, India has more sales than Europe. The EBITDA margin in Europe is at 10.9%, EBT at 7.8%, and EBIT at 7.8%, and EBT at 7.2% in H1 C22. On page 13, we present the consolidated H1 C22 results for MCIE. MCIE sales are at 50,054 million, again continuing the upward trend. Consolidated EBITDA margins for H2 C22 12.9, EBIT 9.4%, and EBT 9.2%. Let's move to page 15, where we have presented the balance sheet position as of 30th June 2022. The return on net assets is 13.8%, and operational return on equity is 13.0%. MCIE's consolidated RONA has been improving. It was 11.8% as on 30th June 2021 and 11% for CY21. So clearly good improvement in this very key metric. On page 16, we present the cash flow situation for H1 C22. Operative cash flows have been robust despite having to carry more RM inventory due to uncertain steel availability in certain categories. And this is required to maintain continuous production and no customer delivery disruptions. Net financial debt has increased slightly to INR 8737 million as compared to the end of year 2021, although the net financial debt to EBITDA has been reduced to 0.67x. MCIE has also invested in growth capex, which caters to the organic growth requirements largely in India and Mexico, and all backed by an order book. We continue to be optimistic about both our Indian and European operations despite the global economic uncertainties that we are facing. With that, we can now proceed for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Jinesh Gandhi from Motilal Oswal Financial Service. Please go ahead.
Hi, congrats on good numbers. A couple of questions from my side. Firstly, on the European business, if you can share the revenue breakup with respect to on constant currency basis, and also if you can share what was the benefit of RM cost on the revenue growth part.
Revenue in euro terms, and what was the effect of steel?
The revenue in euro, good morning or good afternoon, everybody. This is Ander speaking. The revenue in euros was 7% higher than the reflected in INR, as the exchange rate has changed from €1.88 to €1.82 rupees. Okay, so there is 7% loss in IRS in sales. And regarding the raw material impact, it's approximately 15% up in the sales. Okay, so 15% of the growth is coming from the raw material.
Okay. So if we actually adjust on these two factors, then still European growth was almost at about 14%. Would that be the right way to look at it?
Yes, we could consider that about our real growth in, let's say, in constant raw material and constant exchange rate would be approximately 10%. Okay, that is the ratio in a market that was reducing or is affected negatively due to the European situation.
Okay. Understood. And second question pertains to the energy cost pass-through. We have indicated about negotiations coming to end. So what kind of price increases have you got? Is it for the entire energy cost inflation? Has that been entirely been absorbed by customers, or they have asked you to take certain hit on that as well?
Okay, we have had big negotiations and hard negotiations with all the customers. Let's say the agreements were different in each of the customers, so there is not a pattern there. But with most of them, we reached reasonable agreements where the energy costs were passed through partially. Okay, not 100% was accepted. I mean, this was considered as a special situation in the market, so we absorbed part of the cost, and the rest was absorbed by the customer. So depending on the customers, would be around 60-40, 70-30. This is the range of the agreements we have reached with the customers.
So 60 to 70% pass through and absorption of 30 to 40% is
Yes.
What is that? Okay.
That's right.
Got it. And third question is on the European market demand side. So we are hearing about some bit of slow evolution of demand in the European market despite chip supplies improving. So what are you picking on that side from your customers? Okay,
it's true that the POs from our customers, let's say what we call EDIs, the electronic orders that we receive in our systems, are showing a relevant increase for the next months. Okay, so our customers' expectations are quite strong, and we see a really strong Q3 and Q4. Nevertheless, I would say that we are quite cautious, and we have certain doubts of that these orders will come real in the future. Okay, because of the special situation in the European economy, and especially in the geopolitics, the war in Ukraine, and the potential shortage of gas in Northern Europe at the end of the year. Okay, so hopefully all these kind of things will be solved, and I hope that the demand will match the orders that we are receiving from the customers. But you are right, the trend, at least the information we received from the customers, is really good news.
Okay, got it. And last couple of clarification, the question is to JP. One is with respect to the other income in EU seems to be on the higher side. What has led to that? And secondly, the interest cost for the Indian market, India business was quite low. So what has led to that?
JP?
Can you hear me?
Yes,
Yeah.
yes.
So on the other income piece, we have received some insurance claims in Europe. So about 240 million in this quarter. So that's one receipt. And on the standalone interest reduction, you can see it in console also. It's basically exchange rate positive impact.
Okay, so adjusted for the forex impact, interest rate would be in that.
Yes.
Sorry, interest cost will be in 120-130 million per quarter range.
Yes.
Got it. Can you quantify the forex gain in this quarter?
In this
around 60
quarter,
million INR.
Yeah.
Sorry, I missed the number.
60 million. That's what already.
60 million. Okay, got it. Thanks. I'll fall back in queue. Thank you.
Yes, thanks, Jinesh.
Thank you. The next question is from the line of Siddhant Dand from Goodwill. Please go ahead.
Yeah, hi. So my question is, what's the 225 crore intercorporate loan in the cash flow?
JP?
255.
Cash flow.
You're talking of the 2.25 crore outflow, no?
And in the cash flows, there's, like an intercorporate loan that you seem to have given.
Yes.
So could you just...
So this is, I'll explain. This is basically Europe has seen a very good cash flow this first half, and almost 28 to 30 million euros in cash flows, which has been, and whatever surplus we get in Spain, we park it within the group. So at an interest rate of about 1.5%.
So it's within
additional cash.
Sorry? Is it within CIE, the intercorporate loan, or is it?
No. It is within CIE. It's with CIE Automotive.
It's with CIE Automotive.
Yeah.
Okay. Like any duration of this or something, or?
See, this is basically cash pooling. So, like we explained in the last related party approval we were taking, while CIE can, this is a loan given, so we can call back anytime.
Okay. Why won't you just pass it on to MCIE India or something? Just want to understand.
MCI India, we would, the only way we could get it here is through dividend route, which is not tax efficient.
Okay.
And so really we'll have to think through, and we have to see how much money we need there. So we'll look at it, how efficiently it can be used. But as it stands today, we earn decent interest rate on it, so we are parked in.
No, but why can't we directly just keep the money, ourselves instead of giving it to CIE? Just understand.
Keep it where?
No, just keep it with ourselves, instead of giving an intercorporate loan to CIE.
So keep it with Dalfor, you meant to say?
Yeah.
And keep it with the bank, you will get nothing.
Okay. So you're giving it a loan to CIE and they are giving us an interest rate on it.
That's what I said. We are earning 1.5% in Europe, which I think is a decent interest rate to earn, right?
Okay. And my next question would be, how much is Metal Castello, benefiting from the, fall in the euro compared to the USD? Is that the primary growth driver there in earnings?
No, I don't think that is the reason. Because the growth of Metal Castello was started several months ago without exchange rate impact. Okay, so the reason of Metal Castello doing well is coming from the recovery of high road components and, let's say, the infrastructure improvement in the USA. So it's not related. The growth of Metal Castello is not related to the exchange rate. Of course, we will be benefited by that, and we hope that in the future, perhaps we could see even higher improvement.
And what percentage of our total sales in Europe are exports?
Metal Castello exports about 30%. A third of Metal Castello revenues are exported to the US.
No, overall Europe.
50%.
No, Metal Castello has increased the exports revenue to 50%.
50%.
And Metal Castello is roughly about 20%.
15 to 20%.
15 to 20% of the European revenues.
Okay. And about in the CapEx India, so the plastic, we've shown interest in the plastic, CapEx or, growth over there, organic or inorganic. So any update over there?
No, we keep looking for it. Right now, nothing in the plastic space that we have, either organic or inorganic. No plans as yet. Yeah.
Okay. And just a Germany-specific question, this particular quarter, was it profitable, our business in Germany, or the, energy cost really hitting us over there?
So our German business is struggling because of the, let's say, inflation plus the energy cost increase. And of course, it was a difficult time before the crisis and the inflation came. Now the situation is also really, really tough. Okay, so let's say that the German business is trying to survive, and we are working on internal efficiencies, and we are trying to pass through the customer the real impact that we are suffering in the business.
So I would assume we are not made a loss this quarter. We are not losing money, right?
We are not losing money. No. But we are not making money either.
Okay, fair enough. That was known. And just my last question is, any of the profitability been because of there's been some fall in metal prices in India. So has there been some lag in pass through because of that profitability is boosted or nothing like that?
No, we have yet not experienced a drop in raw material prices in India. We do expect it to happen, but right now in this quarter, there's no effect of that.
Okay, perfect. Thank you.
Thank you. Thank you, Siddhant.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Thanks for taking my question. My first question was on the operating income. So Europe, if I see the operating income, it's increased quite sharply. So even in euro terms, if I look at it, the operating income is almost double YOY. So can you just talk about what's it here and what's driving this increase?
EBI, when you say net operating income, you refer to EBIT?
No. I'll tell you the slides better. So I'm talking about the other operating revenue. Sorry, my mistake. Other operating revenue.
So you are talking about slide number 17, right?
Yeah, that's correct.
So slide 17, we have Europe other operating revenue is 953 for H1 C22 and 737 for Q2 C22. Right?
Correct.
That is the number you are referring to.
Correct.
This one?
No, Q2. That is H1 number. Q2 numbers.
Okay. This is 737 million.
Yes.
Yeah. Okay. Yeah, in other operating revenue, we are including all the income related to the scrap sale. And also, as if we has discussed before, we have some incomes coming from an insurance claim that we have received this Q2.
Sorry, but the insurance claims, are they sitting in other operating income or in other income?
It's in other income.
Okay.
Sorry, just for other income, just sorry.
Yeah. So other operating revenue will be effectively just a major part would be scrap sales.
Yes, another operating income is related to the scrap sales.
Got it. Thanks. Secondly, just wanted your thoughts on how the demand situation, how are you looking at the demand situation in India? I mean, PVs and I think tractors is doing quite well. Even on the MHCV side, we are seeing good momentum. But what's the view on the two-wheeler side? What are you hearing from your customers and what's the outlook going forward here?
Yes, two-wheelers has been struggling for some time. We all know because of the total cost of acquisition has gone up for two-wheelers. But we are seeing an uptick in the two-wheeler schedules as we see today. It is still below, say, the 2008 levels, much below the 2018 quarterly levels. But there is certainly an uptick from a quarter-on-quarter basis. So, yes, the base is low, but we are seeing some growth in the two-wheeler segment as of now. As I said, everything is subject to no change happening due to the global economic factors.
Okay. And just last question. Specifically with our key customer M&M, we are seeing a few new launches that are coming up. The Scorpio XUV700 is doing really well. Just wanted to understand how has our content shaped up in these new models compared to, say, the content that we were doing in the past? Has our content gone up and would we benefit from the kind of response that we are seeing for these new models?
Yes, we will benefit from, content-wise, I cannot give you an exact answer at this point of time. I don't have an answer to that, but it is true all our business with M&M is growing in every vertical that deals with M&M. So yes, we will continue to benefit from the good performance of M&M models.
Okay, got it. Thank you. I'll get back in.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, congratulations, Mr. Ender and Vikas and JP on the good performance. I have a question for this Ender. When he said that Q3, Q4, we are anticipating much better demand and much better growth. So this is YOY or we are talking of H1 to H2?
It's H2 versus H1. Okay, we expect the second half to be better than the first half of the year. Yes, and it's true that the demand and the EDI is, let's say, the orders that we have, the order book that we have in our systems now shows a big increase. For even we are receiving those orders in July, August, September, but what I told also is that perhaps these orders will not be executed and the reality will be milder than they are now planning. Okay, so we are cautious of what can happen in the European market because there are a lot of uncertainties in front of us. But the message from our customers is, from all of them, I mean, the general view is quite optimistic. So let's see.
So Bharat Bhai, in terms of forecasts, and this is, since it is public, we can tell you, the IHS forecast for H2 is roughly 8.3 million units production compared to 7.6 in H1. So that's roughly a 9% increase over H1. But as Ender pointed out, given the gas situation, especially in Germany, which is a main production area for the European light vehicles, the reality can be very different from any of these forecasts.
Yeah, because, and this is even after factoring that normally H2 has a 5 months operating vis-a-vis.
Yes. H2 is normally 5 months or even less than 5 months. It is basically 4 months and 3 weeks. Even after that, that's the forecast as of now. But as Ender has repeatedly pointed out, let's take it with a grain of salt. Not even a pinch of salt, a grain of salt.
Fair. And second, on now Europe during our lockdown, I mean COVID-19 lockdown, we had worked substantially to bring down the break-even level, so which was around say 80 million per quarter run rate at PBT level break-even. Now with this inflationary cost and increase in the energy cost, so what level European business can break even at PBT level?
JP?
So I have, yeah. Vikas, I will take that.
Yeah.
So we talked about, Bharat Bhai, I think because of the energy price increase and all, we will be around 100 to 105 million euros per quarter.
We can PBT level break even.
Yes,
and current quarter number is around 155 million. I mean Q2. In euro term?
Yeah, sure. Yeah, around 150, yes.
Okay. And now second question is on India and for Ender. See, currently our CV part contributes around 10% of the India business. Is that fair understanding?
Yes, roughly, including light commercial vehicles. Yeah.
Okay. So do we have any plan, I mean, to increase that business, because that next 2 to 3 years, I mean, that business looks much uptrend side. So do we have any plan, and if that, how do we expect that revenue mix of CV to go up in couple of years?
CVs, we do business with CVs in foundry and in stampings, and if the CV volumes go up, we will commensurately go up with that, and if need be, we can look at increasing our presence there, but we will benefit out of growth in CVs. If the question is that, yes, we will benefit.
But is there any chance that revenue mix contribution from CV increasing?
It may not increase drastically, but that number 8-10% can become more than that, but it can't become 20%.
Okay. And last question for JP. JP, in last year, our working capital used to be remain negative, and this time because of higher inventory, as Vikas explained. So how do we see now steel price stabilizing? Do we see that for second half, our working capital again go back to negative level and positive cash flow can be generated?
JP, you are taking that? Net working capital position in India, how can it become better?
Yes, there in the following months we should see a reduction in the net working capital. For this effect of we expect that the steel price will remain constant, or at least it will not go up, so it will help us. And also we will readapt our stocks to the sales level, so we will at least see a small improvement in the net working capital in India.
Okay. Thank you and all the best.
Thanks, Bharat bhai.
Thank you.
Thank you. The next question is from the line of Nimesh Shah from MK Investment Managers. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. So I had a question on the Europe business. Adjusting for the forex and the commodity RM prices, like Andy mentioned that we have seen a 10% growth, and looking at the production numbers in the Europe, there has been a decline this quarter and for the first half as well. So just wanted to understand what is leading to this market share gain for us, and do we anticipate this outperformance continue, and what kind of then growth should we expect in the Europe business?
Okay, what we see is that our market share has increased in certain customers in some of our business. One of the increases is happening in Metal Castello, as we explained, because the business is growing importantly. That is one of the reasons. Second reason is in our crankshaft business in Spain, in our passenger vehicle forgings. We are seeing also a certain increase in market share, probably because some of our competitors are having more difficulties, or let's say the market is moving due to the difficult situation in European countries. So that's what we see, and probably because of our product mix, we are being benefited by that. Okay, so we cannot see a single cause for this improvement, but those are the main drivers.
Right. Yeah, that's it from my side. Thank you.
Yes, thanks, Nimesh.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi. A couple of questions. One is on the India business. Any indication of what was the benefit of commodity cost inflation on the top line?
Effect of RM on Q2 India revenues. JP, will you take that, please?
It's approximately 10%.
10%.
10%, yes.
Okay. And the second question pertains to the sunroof system which CIE Automotive has in their portfolio. So is there plan to launch that in India through the listed entity, or that will be through unlisted entity, or will come separately that way?
Mm-hmm. Okay, that is a different business that CIE bought to and is managing from a different country, and this is mainly directed from China. So this business will be directed by CIE directly.
Got it. Okay, thanks. Thanks and all the best.
Thank you. The next question is from the line of Nikhil Gale from Axis Capital Limited. Please go ahead.
Yeah, thanks for taking question again. So just taking forward the market share gain point that you talked about in Europe, just wanted to understand for the product that we are present in Europe, How is the competition like? I mean, is there a decent enough chunk of like small players, and is it fragmented? Why I'm saying that is because in this current kind of cost situation, maybe some of the larger players are better placed, and that is driving market share. So, do you see enough headroom for you to gain market share with all these small players kind of going off?
Yes, probably we will be benefited. I mean, the stronger players will benefit from the consolidation of the market. This is something that we are forecasting since several months. So that is probably one of the reasons of our growth, of our market share increase in the last quarters. And yes, that is a reality. Probably this consolidation will happen, especially if the situation continues as hard as it is in this moment.
Okay. And secondly, given that power and energy cost is such a high proportion or an important cost item for the businesses that we are in, again, given the kind of cost increase that you've seen in Europe, are there now increasing conversations with customers to do more of the production in India and then kind of exports, which could kind of benefit our export business?
We don't see that trend in this moment, okay, because of there is also an additional problem is that the transport costs are increasing tremendously. Also, the difficulty of the logistic in this moment, the lack of enough logistic routes and ships to move the product and the material from India, from China to Europe, it's also blocking that. Also, our customers are afraid of all the geopolitical issues that are happening around the world. So, in our opinion, the local-to-local strategy will be reinforced after all these things that are happening in the world. Okay, so we don't see that move in this moment. We probably see certain strategy changes in our customers, but at this time, I would say that probably the local-to-local will be the main strategy followed by the customers. Also, and we have certain customers that are referring to the CO2 emissions coming from the transport. So, from the environmental point of view, also their view is to localize as much as possible.
Okay, got it. Thank you.
Thank you.
Yeah. Thanks, Nikhil.
Vikas, can I come in for a minute?
Yes, please. Go ahead.
This is for everybody because on slide 17, there's a question on other operating income.
Yeah. So this is with respect to that question that was asked regarding the other operating revenue in Europe of 737 million, right?
Yes.
In Q2 C22. Go ahead, sir.
So with a lot of apologies, that number, Q2 number needs to be corrected. The H1 number is correct. So Europe, instead of 737, we should read it as 478, and Q2 total is 1463. We'll of course send a correction, but for everybody to just note.
JP, will you please repeat it?
So if you go to the slide 17.
Yeah. And we are there.
The Europe number 737 should get replaced with 478.
478, yeah.
And console should be 1463. So it will more or less fall in line with what was in Q1. So there is no significant increase in other operating revenue.
Okay, fair enough. Other operating revenue, that's right?
Yeah. Yes. So the only change is in other income, not in other operating revenue.
Yeah, okay. So that's for everyone. Apologies for this error.
Thank you. The next question is from the line of Kirti Agarwal from ICICI Bank. Please go ahead.
Yeah, so my question is,
I'm sorry, you're sounding very soft. Can I request you to speak through the handset?
Yes. Hello?
Yes, Kirti ji.
Yeah, so I wanted to know if the EV industry is expanding, so can we get a numerical number if what is the order book in hand for CY23? And if we are seeing a major development in the Tamil Nadu plant as the company has incorporated recently. So how is the company planning for the capex of that industry?
Okay, two questions you are asking. If I may repeat, Kirtiji, one you are asking is what is the EV order book in India, right?
Yeah.
So we had indicated in our year-ending call of C21 that like we were talking in the range of roughly 400 to 600 crores in India at that time. So if you refer to our transcripts of that period, of that time, as of now we don't have a figure. We'll again come back with the same number, towards the end of the year. But what we can say is that our presence in the EV order book is, we are quite comfortable with whatever is happening. Especially, we have two businesses which have a significant two-wheeler presence. Our aluminium business out of Aurangabad and Bilforge business out of Bengaluru, and both of them are doing well, especially Bilforge as far as the EV order book is concerned. Details right now we don't have the details, but that is something we can. The second question you had was with respect to CIE Hosur. I think the investment that we are making on that. What specifically did you want to know?
So I wanted to know how is planning for the funding of the capex, as the company is planning for 500 billion capex, I guess so. 5 billion capex.
What is the capex for CIE Hosur, and when is it going to start production, right?
Yes, sir.
JP, on CIE Hosur?
So, ma'am, we have already invested something like 1.3 billion out of our internal accrual. The commercial production has started towards the end of June, so we started dispatches. Now, talking regarding your 5 billion, I mean that's only an MOU. This to be spent over next 5-6 years, and not immediate. We believe CIE Hosur should be able to generate its own cash flows to meet its capex maybe from a year from now, a year or and a half from now. It should be able to generate its own cash flows.
And the funding plan.
Sorry?
Okay, sir. Thanks a lot, sir, for answering the question.
Thanks, Kirti.
Thank you. Next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, thanks for the opportunity again. Because so all this capex what we are doing it Hosur and even Rajkot so can you give some color which are the product line that we are expanding, and in future also the larger capex will be on what kind of a product line?
No, capex is largely in India also. Again, this
correct. India I am talking.
This everything is in India. Hosur is a whole set of products both for domestic and export customers. Rajkot again, it is because of the expansion of our customers, of our existing customers.
Which are the major products in Rajkot?
Rajkot, we have gears and shafts, the same product line that exists today.
Okay.
Okay, and then Aurangabad Electricals, again a new plant we are making again for our existing customers but non-Bajaj. Okay. So there are other areas also we are making investment. We made investment for warm forgings in Chakan, forgings Chakan, I think, and we are making investments in magnetics, in our magnetics division. So magnetics division will be new customers, and forgings Chakan is also a new product because Chakan was not doing warm forgings. So this is a kind of synergy between Bilforge and forgings Chakan, the warm forgings plant.
Okay, and question is for Ender. See, we have good presence in hybrid EV side in the Europe. Now Maruti has come up a very new product, which is largely in India. Hybrid EV was very less. So how do we see opportunity for ourselves in that hybrid EV, and do we expect that will be a last little longer than the IC?
Okay, there is a big debate on this in the market. Okay, the main let's say we see a big advantage to the hybrid because you have the internal combustion engine plus the electric motor, so you can enter into the cities without polluting. I think this was the initial idea of the OEMs, of the auto producers, but unfortunately there is a problem with the cost of the hybrid, okay, because you have to double the systems. So most of the OEMs, as far as we know, are going directly to the electric cars. Okay, so hybrid will be a temporary solution during 4 or 5 years until the infrastructure is set. Then they will go directly to the complete electrical, pure electric vehicles. Okay, that's how we see the future.
Okay. Thank you.
Thank you.
That's all.
Thank you. The next question is from the line of Hitesh Arora from Unifi Capital. Please go ahead.
Yeah, just wanted to clarify, I think this was asked earlier. On the India business, on a sequential basis, what is the benefit of the RM increase, raw material increase on the sales side?
On sequential is negligible. It's something like 1% in QoQ.
1-2%, no more than that.
Okay.
Okay. There is no impact. Mm-hmm.
Okay, thanks. And on the the capex that you've mentioned, what is the sort of incremental revenue that we can expect in the next calendar year?
Again, we won't be able to give that exact number for the capex, but we have an internal rule of meeting a minimum return on investment for every capex. So if the market situation is right, then we should definitely get good returns out of the new capex.
Do you look in terms of asset turnovers as well? If you have some.
No, we look at it in terms of ROI. Of course, asset turnover is an integral part of that. So yes, so there are various levels at which we look at, starting from the profitability, the growth number, profitability. So there are a whole host of things that we look at, but the most important factor is the return on that particular project.
And when do most of these come on stream? Your expansion plan and the.
No, there is of course a time period between getting the order and going live with that order. It takes anywhere between 12 to 24 months before a capex can go live.
Okay. So at least 12 months from now. At least 12 months from now.
Yeah.
A year from now. Okay. Cool. Thank you.
Yeah. Thanks, Ritesh.
Thank you. The next question is from the line of Siddharth Dand from Goodwill Warehousing Private Limited. Please go ahead.
Yeah, hi. So I just wanted to my follow-up to my previous question. So how much money, how much is our loan to CIE total amount as of H1 ended?
JP and Oroyd's loan to CIE under the cash pooling thing.
40 million euros.
40 million euros. Okay.
Yeah.
And have we taken any loan from them also in some other company or something?
So our Mexico loan is from them, and in Germany also we have taken loan from them.
So how much money have we taken from them and how much do we owe them? Can you just give that number? So 40 million, and this side?
This side it will be close to about both put together another 80 million taken from them.
Okay.
Within Mexico and half within Germany.
Yeah, both put together.
Okay. Secondly, like we discussed that the German business is not doing well. So is there any goodwill over there, we could consider writing off or impairing?
So we have goodwill, of course, there, but that's an annual check we do for accounting. So we go by that.
Correct. So because it's been struggling for so I'm wondering why we haven't, impaired it here.
No, there we have one unique cash generating unit, which is considered full Europe, because in the end we can move parts and projects from our Spanish plants and German plants. So in the end we make the testing, the testing of the goodwill based on our cash generating unit. And every year we will test this test, and up to now we do not have any signal or any aspect that tell us that we should make any kind of impairment. So for the moment we do not see any risk on that part.
Okay. Okay. Perfect. I just wanted to, just request, if you could keep a gap between the earnings and, the call so that, we can actually go through the numbers properly next time.
Yeah, no, of course. That is the normal practice that we have. We had certain constraints this time, Siddharth. So our apologies for that. It's late, I do understand, and therefore, but instead of, waiting till Monday evening or Tuesday, we thought it's better to do it right now.
Yeah. Of course.
Yeah, so our apologies, but we do try to keep that in mind, and we'll keep that in mind, Siddharth.
And if there are any follow-up questions, you can always call us. Yeah, because.
Yeah. Perfect. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Hitesh Arora from Unifi Capital. Please go ahead.
Yeah, thanks again. Just, on the German business, what are our plans around sort of turning around the business or restructuring the business or bringing it to a part of sustained profitability? If you could, throw some light.
Germany turnaround plan.
Okay, that in our German plants we have been struggling since several years, and we have been doing, let's say, all the restructuring, a lot of the restructuring activities. And it's true that during the last years, despite the negative environment with the very low sales and with cost increasing, we have been able to keep the company without losing money. Okay, so that was the result of all these activities. Unfortunately, right now we are in front of an additional difficulty coming from the energy plus the huge inflation that we are facing, and we are attacking that on one side, looking for internal improvements in terms of efficiency gains, plus the passing through the cost to the customer, as we cannot afford absorbing those additional costs that we are suffering. Okay, so that's the evolution of the business. We, on the other hand, we have a very strong order book in front of us. So if the business, let's say, comes as our customers are planning, and the energy prices and raw materials go down as it was expected for next year, then we could survive properly. Okay, that's our expectation.
Sure. Understood. Thank you.
Yeah, thanks, Hitesh.
Thank you. The next question is from the line of Anshul Mittal from Care Portfolio Managers. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah, this is Mohammed Patel. So my first question is, what percentage of sales in Q1 FY23 are only ICE related products?
What percentage of sales are ICE, related to traditional powertrain?
Yeah.
So no, that would be a majority of that, like 90% plus in Q1 23. Just think of it this way. In India, EVs, I think in two-wheeler segment, I think EV penetration in Q1 22 was, or Q2 22 was about 4%. Actually, little less than 4, 3.5, 3.7%. In cars, it was negligible, maybe 0.5, 0.6%. In three-wheelers, which is a very small segment, it was decent enough. And in Europe, this number of battery electric vehicles, we are not talking hybrids, because as was explained earlier, hybrid has both the powertrains. So pure battery electric vehicles in Europe is roughly about 8-9% in Q2 C22, or Q1 F23 that you said. So right now the basic numbers are very low. So our revenues are also quite low. All that we are saying is, among the new order book, we are generating a lot of, the new orders that we are getting, a lot of them pertain to EVs. But then they will start making an impact on the P&L maybe towards late next calendar year or early 2024 calendar year. Okay?
Okay. My second question is, there is a difference in the sales that we report in SEBI and the investor presentations. For example, India, in the SEBI result, it is 1386 crore. In investor presentation, it is 1279 crore. So what explains the difference?
Basically, in SEBI, it is all revenue. So you need to add the other operating revenue to the sales number to get the SEBI number.
Okay. That's
what we give on the slide 17.
Okay, understood. Thank you.
Thanks, Mr. Patel.
Thank you. Participants, you may press star and 1 to ask a question. Anyone who wishes to ask a question may press star and 1. As there are no further questions, I now hand the conference over to the management for closing comments.
Yep, Anders.
Okay. So, as always, thank you for all of you for the participation and for the good questions and well-directed questions. I just wanted to say that in a very difficult market scenario, our company has solved and has got good results and show its resiliency, and we expect to continue improving our results in the next quarters. Okay, it's true that there are certain uncertainties coming from the volatility and the, let's say, potential problems that could happen in Europe due to the war in Ukraine, but we are quite optimistic and we expect that the next quarter will be much better. So I just want to thank you all the Mahindra CIE team for the good job, and thank you to all of you until next quarter. Thank you very much.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Yeah. Thank you.
Thank you. Thank you very much.
Thank you.